to talk about AMD because it hit a new all-time high, and you have some data that shows a comparison between Nvidia and AMD. So what does that look like now?
Yeah, the gap between Nvidia and AMD has stayed enormous over the last couple of years. We love AMD. We got long AMD in June, and it's been on a tear ever since. We like the second place position that they're in. There's a lot of upside there, but the winner, the king, is still Nvidia. And if you're playing AI, if you're playing data center build out, then Nvidia just has to be part of the equation. There's no way around it. And so when we look at the trajectory of these compute labs building out, of the pace at which ChatGPT and others are adding users, there's just no question that this is a trend that is accelerating. It's enormous and it's permanent. There's a complete shift in how computers work happening right now, very reminiscent of how computers shifted when we went to the internet, except for much faster and much larger. And so when that type of thing is happening, I think the best thing for investors and traders to do is to just say, I'm going to ride this wave. I'm not going to try to time each and every move inside of this, because it's so transformative that simply owning the winner in the space is enough to return, to get great returns. And so when we look at Nvidia versus AMD, Nvidia is dominant. It will continue to stay dominant. The amount of money that they're bringing in and able to put into R&D will keep them dominant. It's one of the best executing companies in the history of the world. And so there will be multiple winners in the AI data center, digital mining race, but Nvidia is first place and the gap seems to only be growing.
Andy, this is a company that's got an unbelievable AI chip business.
Yeah.
But very possible what might overtake that over time is the venture capital arm of Nvidia. That is, as I read it right now, Andy, they're in automotive, cloud computing, AI infrastructure, semiconductor manufacturing, telecom innovation. I can keep going. They're going to own not only the number one chip that they keep innovating on. Remember, the Rubin is waiting on the horizon as a new chip, but they're also investing in all these companies where they're going to own major chunks in all these companies. This venture capital arm might be the greatest engine for profits that we've seen. So what is more important? Obviously now the chips are more important. Do you see a day where this venture capital arm overtakes Nvidia? Because remember, the cyclical nature of these chips is often a boom bust kind of thing. They're taking the volatility out by owning the other parts, in my opinion.
Important details on Nvidia's new Blackwell and Blackwell Ultra GPUs should be included in the company's next earnings release. Big tech is still investing historically large sums in capital projects, which is a huge boost to Nvidia's data center business. If Nvidia impresses Wall Street, its present value allows for significant upside. Expectations are extremely high as Nvidia prepares to release its fiscal third-quarter earnings on November 19th. The artificial intelligence, AI leader, may be preparing for another spectacular rebound after a brief retreat earlier this year, which was prompted by President Donald Trump's Liberation Day tariff announcement and fresh competition from China. Given the soaring demand for GPUs, the rapid expansion of AI infrastructure worldwide, and valuation multiples that allow for further growth, Nvidia's next report may rekindle investor excitement and propel the company's stock higher into 2026. The latest Blackwell and Blackwell Ultra architectures from Nvidia, which were created to replace the industry-leading Hopper series, mark a significant improvement in computing power. Businesses are rushing to use the GB200 and GB300 GPUs because they are specifically designed for large language models, LLMs, inference workloads, and next-generation AI applications in robotics and autonomous systems. Because cloud hyperscalers like Microsoft, Amazon, and Alphabet, as well as tech giant Meta platforms, are incorporating Nvidia GPUs into their quickly growing AI clusters. Orders for Blackwell systems are still remarkably high. Beyond the hyperscalers, Nvidia has established significant alliances with businesses such as CoreWeave, xAI, and OpenAI, all of whom are constructing specialized GPU clouds and supercomputers to train ever more complex AI models. Nvidia's latest technologies are even being integrated into turnkey infrastructure solutions by commercial clients like Dell and Oracle. Nvidia has a level of revenue visibility that is extremely uncommon in the historically cyclical semiconductor business due to its wide-ranging and diverse demand, which highlights its commanding position at the center of the AI revolution. Nvidia is clearly at the forefront of the global AI infrastructure build-outs that are now underway. By the end of the decade, industry estimates from management consulting company McKinsey & Amp company indicate that spending on AI data centers might total $7 trillion, ranging from networking hardware and GPUs to the enormous energy systems needed to support activities related to model training and inference. The hyperscalers are, of course, at the forefront of this trend. It is anticipated that big tech will invest up to $500 billion on AI infrastructure in the coming year alone. But there is still more demand. The need for AI computing is quickly growing beyond hyperscalers to include startups, research facilities, and even independent clients. Notably, nations in the Middle East are starting their own iterations of Project Stargate by entering into multi-billion-dollar contracts for data centers powered by Nvidia in an effort to hasten their own aspirations in AI and technology. With a market valuation of almost $4.5 trillion, Nvidia is currently the most valuable corporation in the world. Its profit trajectory, however, continues to inspire remarkable confidence. Over the next 2 years, analysts predict that earnings per share, EPS, will increase by more than 70%, which is a growth rate that is nearly unprecedented for a firm that currently brings in hundreds of billions of dollars annually. Despite its enormous size, Nvidia is valued at about 40 times forward earnings, which is fairly fair considering the company's growth trajectory, market leadership, and structural advantages. With an unrivaled pricing power, a software ecosystem moat honed over decades of developer adoption, and CUDA integration, Nvidia boasts a gross margin of over 70%. The stock may easily re-rate higher as investors adjust their expectations if the company reports on November 19th and again produces record-breaking results and increases outlook. Nvidia is well-positioned to continue its upswing into 2026 and beyond because to its growing enterprise alliances, accelerated GPU shipments, and unmatched leadership across AI and computing workloads. As semiconductor stocks increased overall due to Intel's impressive performance, Nvidia saw a 1.86% increase. Cloud spending has increased 63% due to the AI boom, while analysts predict 58% growth in Nvidia revenue. Amid tensions, Nvidia executives sell shares, while shipments of chips from China continue to stall. Following positive results from Intel and ongoing optimism on artificial intelligence, AI expenditures, Nvidia's stock jumped in Friday's trade, following increases in the larger semiconductor industry. In pre-market hours, the stock rose 1.86% to $185.56, while competitors Broadcom and Advanced Micro Devices AMD increased 3.1% and 6.7% respectively. Intel's impressive quarterly earnings and its forecast that semiconductor demand will surpass supply into the upcoming year, a sign of sustained strength in the global chip market, lifted spirits throughout the chip industry. Intel's hope and Nvidia's calculated cooperation. Prior to reversing the majority of the gains, Intel shares surged 7.75% during Friday's session to reach its intraday high. The business had a positive forecast, predicting sustained growth in demand for chips connected to data centers and artificial intelligence. The AI infrastructure growth has greatly benefited Nvidia, which had earlier declared ambitions to invest $5 billion in Intel. As part of the agreement, Nvidia will include Intel's proprietary central processing units, CPUs, into its AI infrastructure platforms. The collaboration demonstrates Nvidia's goal to improve the compute efficiency of its AI systems while diversifying its supply chain. According to analysts, the partnership demonstrates how the semiconductor industry is becoming more interconnected and how key players are striking a balance between strategic cooperation and rivalry in order to meet the growing demand for AI. Growth fueled by AI and growing debt worries. Wall Street's expectations are still being shaped by the ongoing AI chip boom. The biggest cloud computing companies, such as Microsoft, Amazon, and Alphabet, are expected to raise their capital expenditures by about 63% in 2025 compared to 2024 levels, according to analysts. Christopher Rowland, an analyst at Susquehanna, predicts that Nvidia's revenue growth will drop to 36% in 2026, although this year's planned 58% growth might be supported by such aggressive expenditure. Nonetheless, some market watchers are raising red flags on the increasing use of debt to fund these enormous AI infrastructure projects. Major banks are reportedly preparing a $38 billion debt offering to finance Oracle's data centers, according to Bloomberg, suggesting a possible move away from cash-funded development and toward leveraged financing. According to a research by Garrett Melson, portfolio strategist at Natixis Investment Managers, debt issuance by significant AI-related companies has started to increase, even if the great majority of that AI build-out is still being financed out of cash flows. This is one of the few red signs we've noticed in the space as bubble fears have started to grow. Chinese headwinds and executive stock sales. Significant stock sales by Nvidia's top executives were disclosed in recent filings with the U.S. Securities and Exchange Commission, SEC. Under a prearranged trading plan, CEO Jensen Huang sold 225,000 shares between October 21st and October 23 for a total of around $40.7 million. Using a predetermined plan as well, CFO Colette Kress sold 47,740 shares for $8.6 million. Analysts are still keeping an eye on Nvidia's exposure to the Chinese market, where shipments of cutting-edge processors have been restricted due to U.S. export restrictions. Although shipments have not yet started, the company created its H20 chip especially for China in order to comply with laws. According to Rowland, the situation is still unclear, and in light of the increased geopolitical tensions, the Chinese government might be discouraging orders. Rowland continues to rate Nvidia shares as positive and sets a price target of $200. Some individual bubble stocks have probably been produced by AI. AI stocks may continue to rise due to the industry's growth rate. The majority of tech investors attribute the 2022 bear market's termination and the subsequent spike in stock values to artificial intelligence, AI. These profits gave rise to a new generation of transformational stocks, with Palantir and Nvidia in the forefront. Investors are now wondering if AI stocks are in a bubble because to the astounding returns in some of these stocks. Given this, have investors lost out on this boom, or is there still room for them to invest in AI? Here's what investors need to be aware of. Investors in this situation need to first comprehend stock market bubbles. They happen when the price of equities rises significantly more quickly than the value they represent. It's true that there are individual AI stocks that may sell for bubble-level prices. Palantir, whose forward PE ratio just surpassed 275, serves as an example. Its profits would probably need to rise significantly over time in order to support such a forward earnings multiple. Furthermore, even for long-term investors, bubbles can be hazardous. For example, it took until 2022 for Micron stock to rise back to its dot-com bubble peak. Additionally, silver bulls have been waiting since 1980 for the price of silver to reach a new all-time high, which it recently did. Investors must distinguish between bubbles and the overvaluations typical of tech boom stocks because few can afford to wait out such recoveries. Investors must assess the industry's progress after they have a better understanding of bubbles. Grandview research projects that by 2033, the AI market will have grown from about $279 billion in 2024 to over $3.5 trillion. Over the following 8 years, that translates to a compound annual growth rate, CAGR, of 32% MAU. That suggests two things. For starters, given the business tailwinds, it is less expected that the bubbles in AI will burst anytime soon. Furthermore, an AI-driven bull market is likely to provide even novice investors time to make money. Thankfully, there are significant differences in the prices of the different stocks. For instance, market leader Nvidia has a PE ratio of 52 despite 1,500% gains over the previous 3 years. That just qualifies as bubble territory, even though it is higher than the S&AMP, P500's average of 31. With a 139 PE ratio, it is also less expensive than competitor AMD. However, AMD's potential overvaluation is not comparable to the greater values of stocks like Palantir when taking into account its forward PE of 62. Even among the Magnificent Seven, stocks with PE ratios below 30 include Alphabet, the parent company of Google, and Meta Platforms, a major player in social media. Additionally, Qualcomm is possibly the best value stock in the AI industry. With a PE ratio of 16, investors are probably more worried about China exposure and slow upgrade cycles than they are about the AI-enabled chips the company keeps releasing. Rather, smaller equities appear to be involved in some of the higher values that might be in bubble territory. Even mid-cap stocks that specialize on voice-enabled AI, such as SoundHound AI, don't make money. Given that the average price-to-sales PS ratio for the S&P 500 is 3.4, investors may be alarmed by the company's PS ratio of 58. Quantum computing stocks have more high valuations. Rigetti Computing has a sales multiple of around 1,500, whilst IonQ sells at a PS ratio of 272. Although neither of those represents AI stocks overall, this could suggest that the quantum computing subsector is in a bubble. Investors shouldn't consider AI stocks as a bubble after analyzing individual stocks. It is true that there are potential bubbles in the industry, and stocks like Palantir and a few smaller companies that focus on quantum computing might be among them. However, Nvidia and the majority of companies are probably not in bubble territory. Investors should realize that there are AI stocks trading at a wide range of valuations, even in light of Qualcomm's low valuation. That is encouraging for a sector that is expected to develop at a 32% CAGR. Investors shouldn't be put off by bubble concerns because the expansion of AI is expected to last for years. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.